We just got Canadian employment numbers. Unemployment rose in December to 6.8%. Now, the country did add just over 8,000 jobs last month. That did beat estimates. We're joined by Benjamin Reitzes, Managing Director and Canadian Rates and Macro Strategist at BMO. Thanks very much indeed for joining us, Benjamin.
Thanks for having me.
So the labour market holding in despite all the worries over tariff impacts, COSMA, and companies apparently not investing much right now.
Well, I mean, hanging in there is probably the right way to look at it. What we've seen in the job numbers for the past number of months is a ton of volatility, material weakness in the summer, a big rebound in the fall, and the December report strikes us as a little more consistent with what's going on in the broader economy. We're seeing broader economic growth, definitely on the softer side, and the job numbers we had been getting in September, October, November, those were seemingly a little bit too strong to be consistent with the numbers. And today's number, small gain, increasing the unemployment rate, not all that surprising at the end of the day, and consistent with a Canadian economy that is still struggling under the weight of tariffs and uncertainty.
We have a population that's aging, like every country in the world just about, and we have cut back on immigration. So are demographics affecting the labour market right now?
Well, they do always. That will be more of a longer-term issue for Canada and for most other countries. As the population ages, you'll likely see the participation rate slowly tick down. Elderly tend to participate less in the labor force. That'll probably also pull down the unemployment rate over time. This is not a month-to-month thing. This is something you want to look at over a longer period of time. And there are some trends that will be present there, but not worth highlighting on a month-to-month basis.
The big cutback on temporary workers, so foreign workers or temporary Canadian residents, that must be having an effect as well.
Yes, and that'll likely continue to have an impact. I mean, one of the highlights of this report is that all of the gains were in full-time jobs. And part-time went down. There was also a big increase in the labor force, which is far larger than the population growth. That is an interesting quirk in the numbers. You tend to see a lot of volatility there. Again, you kind of want to look more at the trends here rather than the month-to-month moves. And the reasonable expectation to say that as population growth slows, you're expected to see labor force growth slow as well.
That's it. Of course, when you economists say labor force, you mean people who are working or available to work.
Correct. People who want to work or are working.
Right, yeah. Generally, economists like to see an increase in the so-called participation rate, or they think it's a good sign for growth and wealth.
Well, it's healthy when more people want to work. It can add to growth. You get more people working and creates more production, creates more income in the economy, and that can be additive to growth. There are, of course, limits to that, but we do try to encourage participation generally from a policy perspective, and the government does put in place a number of policies to push in that direction. You still get a decent amount of volatility there, and there are trends. Demographics play a pretty big role there over time as well.
Can you give us some perspective on wages? Have we been seeing consistent wage growth, Benjamin?
It has been trending lower. We're still at about 3.5%, give or take, which is more or less the average for the year. That is down from the past couple of years, but is at a decent rate. I mean, the hope is, I think, that some of the projects that are underway that the federal government is trying to push help boost Canadian productivity, and that in turn helps push wage growth higher. What we want to see is those two coming in sync, and higher productivity pushing more wage growth, which drives higher earnings and income for everybody.
The current unemployment rate, 6.8%, is that high historically speaking?
It's not high historically speaking, but it is on the higher side of things from what we've seen for the past decade plus, where unemployment has been lower pretty consistently. And I mean, at this point, it's consistent with a modest output gap in Canada. I think the Bank of Canada will reiterate that in their monetary policy report later this month. And in the last report, it was around 1%, a little less than that at the midpoint. And they're still slack in the economy. I think that's really the key. And at this point, it's challenging to say when that's going to be taken up. There is still a ton of uncertainty out there We don't know which way the USMCA is going to go. Negotiations are supposedly starting later this month. That's challenging for Canadian businesses. They don't necessarily want to be expanding their labor force at a moment when you don't really know what's coming on the horizon. And so you're seeing a sluggishness in investment, a sluggishness in hiring, and that's creating a challenging environment for job seekers generally and employment.
And finally, it's early days. It's largely anecdotal, I know, at this stage, but is AI having any discernible effect on the labor market?
It's really challenging to tease that out. There are some signs that maybe you're seeing a little bit of that, but personally, I would point more to the uncertainty on the business side rather than AI itself. You would see the impact likely more on new entrants than elsewhere. You can try and categorize things and as to sectors that would be more or less impacted by AI. But I think that's more of a long-term story over the next number of years, something definitely to keep an eye on. But as the economy turns, assuming we get a positive or at least not a negative outcome on USMCA, you'll see business sentiment turn. Hiring will likely pick up on the back of that. And you'll see some of those demographics that are struggling right now, the 15 to 24-year-olds, for example, hiring there will pick up. And so AI over time has an impact, but I wouldn't stress that too much at this point.
Benjamin, thank you very much indeed.
Thank you.
Benjamin Reitzes, Managing Director and Canadian Rates and Macro Strategist at BMO.